Georgia doesn't sell tax liens. They actually sell tax defaulted properties. Georgia has 159 counties. Each one of the counties is authorized to have an auction every month. You raise your hand at the auction to buy, and when you buy, you get a redeemable deed, which is a piece of paper that normally would transfer the property. The property owner can come in and redeem that property, and when they do, they not only have to pay you back all the money that you invested, they also have to pay you a 20% penalty. If they don't pay it, well, then you're going to get the property. Now, here's the beauty of doing business in Georgia. So we're going to learn about redeemable deeds today, which is unusual. There's over 3,000 counties across the United States. Georgia has 159 of those counties. Each one of the counties is authorized to have an auction every month. Now, the county doesn't necessarily have one if they've just got a few properties. So some of the rural counties with just a very small population, they might not have an auction, but generally the auction properties will take place where there's a lot of properties to do. Now, the tax collector and the treasurer is authorized to do that from the legislature. And that simply means that when the process takes place at auction, you get a redeemable deed, which is a piece of paper that normally would transfer the property. The property owner can come in and redeem that property, and when they do, they not only have to pay you back all the money that you invested, they also have to pay you a 20% penalty. Now that's why people like Georgia, because they could get a 20% penalty. You could have 100 sales taking place in Georgia on the first Tuesday of every single month. So you have plenty of choices to buy there. So auctions are online and offline. They're always announced in the local newspaper, and they're also announced in the county website. So keep that in the back of your mind. All right, so there's 159 counties, so there's going to be a lot to choose from. The legislature keeps it the same because they want to get all the auctions done at one time, and that's what they do. So the first part of the month, they're going to do all those auctions. There won't be another auction until the next month. But that's a lot more than most states do. Most states will have 1 or 2 auctions in the year. Georgia's going to have 159 and do it every single month. When we buy the deed, we don't get possession. However, we now have a right to that property. If they don't pay it, they don't come in and redeem the deed, well, then you're going to get the property. Now, here's the beauty of doing business in Georgia. If you buy at an auction today, it's going to start a clock going tick, tick, tick. Any day that they come in to pay, they have to pay you back all of your money plus that 20%. So if they come in and pay their taxes in, say, 20 days, you'll get all your money plus 20%. If they come in 150 days, same thing. You get all your money plus 20%. If they come in on the 365th day, you get all your money plus 20%. And it's called a penalty return. So that's not an annualized rate of return. Now, 20% is a heck of a return on your money.
If you're enjoying this video and want to join our journey to financial freedom, don't forget to like, leave a comment with your thoughts or questions, and subscribe to stay updated on all things wealth building. Also, unlock your exclusive free gift now by clicking the link below. Instant access awaits. Now back to our video.
I'm not a CPA, and I'm not a real estate broker. I'm just a prepared investor. Now, over the years, I've been doing this for well over 30 years. Over the years that I've been doing it, I not only purchase properties myself, but I've become a coach and a guide and a mentor to help other people do that. So I've written many things about tax liens and tax deeds. It's a very simple business. There's unusual parts for each state. So Georgia is one of the 5 states that are penalty states. So that simply means if you go to the auction, raise your hand, and you buy the redeemable deed, and they come in and pay the tax the next day, it's a penalty return. So you would get all your money back plus the penalty. Whereas if you were buying in a tax lien state, you would get an amortized rate of return, which would be much smaller. So let's say it was a 24% return, all you would get would be 2% for that month. So there's a lot of advantages in the penalty states. Let's take an example. Let's do that right now. Okay, so let's assume that an auction was taking place and the property had a value of $8,000. Of course, you would have checked that and known the tax assessed value. So you know the property's worth $8,000, and it's maybe just a residential lot. And the tax auction starts, and you bid and you buy it. You buy the redeemable deed for $2,000. So it's worth $8,000, you bought it for $2,000. Now you just go home and wait. You sit on your rusty dusty. You don't get possession of the property because it's a redeemable deed property owner stays right there on the property. All right, so now we understand what's taking place. Now let's just wait. We're going to sit at home. So let's assume a whole year goes by and the property owner does not come forward and pay the back taxes, which you just invested $2,000, okay, does not pay you and does not pay the penalty. All right, so then what you're going to do is you're going to hire an attorney. And you're going to say to the attorney, look, let's foreclose. And legally speaking, you can do just that. So the attorney, you can watch them do that. They'll go through the foreclosure process and they'll wipe out the right of redemption. The people won't be able to redeem anymore. It'll be now your property. So now what could you do with that property? Well, that would be pretty easy. You could put it on Facebook Marketplace. You could put it on Craigslist. You could use eBay. Basically, let's put it up for $8,000. You bought it for $2,000, and now you sell it for $8,000. Okay, now this is happening every day in the state of Georgia. So the property owner either comes in and pays you, or you get the property. That's the way it works. All right, so let's kind of look at that example. So let's say it was a 4-acre parcel. All right, so up on the screen you can see, all right, you paid $2,000. 1 year goes by, they don't come in and pay. Well, you probably have to pay another year's taxes. So maybe you're all in at, say, $2,800, just to use some kind of example here. But you sell it, and you sell it for $8,000. Well, folks, all that profit is yours. So you didn't get a 20% penalty because they didn't come in and redeem, but you got the property, and now you made the profit on the margin between your purchase price and what the value of the property was. If they had come in and redeem, you would have made 20%. So it's a good way for you to make money. Either way, you're going to be able to make pretty good money in the state of Georgia. Now, a lot of people don't understand what we've talked about here, but if you kind of open up your mind, learn a little bit about it, you're either going to make a 20% return or you're going to get the property and you're going to have that great margin. The two big mistakes at tax auctions are, number one, people don't look at the property. Number two, they don't have an exit strategy. But for you, I've got a special gift. It's below. It's absolutely free, so take advantage of it. I'm Ted Thomas.
Check out our YouTube channel for more helpful information on this 200-year-old predictable, safe, and secure way of making money in real estate. Thank you for watching, and see you on the next video.